Well, hello everyone. It's December the 2nd. I can't believe I'm saying the word December. I'm still waiting for I'm still waiting for the summer to start. All right, it's a brand new week. Holidays are temporarily behind us, and keep in mind, it's still the holiday season, so the typically volume is a bit muted as we head into December. Now, what are the things we need to worry about right here? Washington is due to raise tariffs on $160 billion worth of Chinese products, including smartphones and laptops, as of December 15th. Folks, that's less than 2 weeks away. Now, Trump expressed concern that negotiations might be affected by legislation he signed last week that is intended to buttress Hong Kong's status as a semi-autonomous Chinese territory. This is not going to simplify negotiations. This is going to make them more complicated. As a matter of fact, investors worry the measure at least complicates the negotiations, even if an eventual deal is not derailed. So we don't have any positive upside other than the fact that we haven't heard anything negative from China. The markets are literally rising because there hasn't been any negative news. So that's positive. Now, small caps are still believing China and US are going to work things out. We are now 1, 2, 3, 4. We literally spent the entire week last year above our resistance level. And that's very positive. Very, very, very positive. Volatility remains near historic lows. And I mean really, really near historic lows. If you look over the past 2 years, we are at a literally at a 2-year low. And I believe it's going to come up because volatility is mean reverting. Notice every time it comes below the average, it hits the average. Below the average, it hits the average. And I'm expecting the same thing here, especially with the SPY remaining grossly overbought, as you could see here, which is expected to move here. Notice volume. This is again from August. We are literally, last week was a holiday, so let's move back here. Let's see, volume levels. Let's see here. Look at this. 48 million, 50 million, 41 million, 66 million. Look over here in August. 93 million, 97 million, 104 million. That's August. That's not good. Now, another thing that's causing the volatility to the volume, not volatility, and volatility, volume and volatility to be low is we still remain, the sectors remain very much fragmented. Markets are totally fragmented. This is the top 10 S&P 500 sectors. Consumer discretionary remains on the bottom, technology remains on the top. That's because semiconductors believe that this China trade war is going to work out, whereas the rest of technology, which spills over to consumer discretionary, is still on the sidelines. That's not a market that is expected to rally really, really strong. But the small caps are still breaking out. Now, S&P 500, let me show you something here. Tech, let me show you the level of overbought that we have on tech right now. Let me show you the relative strength index. And I use 10. A lot of traders use 14. I use 10 because I don't like to extend it to 14 days. 2 weeks is more than enough. 2 trading weeks is more than enough trading action. Notice again, overbought, all the way here, overbought. Comes off for 2 days and then comes back, overbought. Needs to cool off. Technology needs to cool off. I'm not talking about a bear market. I'm talking about a cool off to the 50-day line, which will ultimately push back the small caps. Now, the question is, should you be buying the small caps right now? Well, it may not be the worst time, but you may be getting in a little early. The fact is, we are staying above the resistance level for over a week, and that's very positive. Now, I do believe the S&P is going to come down a little bit, and then it's going to start coming back up. As soon as the S&P reaches the 50 or the 200-day moving average, the fragmentation that we're seeing right here, it'll go away. Markets get fragmented when they're overbought and volume is really low, and when they pull back, they consolidate, and stocks become value to their appropriate sector area. That typically happens during a pullback. So when you have a pullback, markets are not stretched out, they're consolidated, all the weak hands are out, they're ready to go out, And I think that's what I'm going to wait for here before moving in. But I got to tell you, this is very appealing. This is very appetizing, all right? So first time small caps are breaking out. If volatility doesn't begin moving up, and if we do work out this trade war, and I've got toes and fingers crossed ready to go, small caps are going to rocket. I mean rocket. Look at this. Look at this. Look at this gorgeous consolidation. I mean, you couldn't draw a channel better than this. After something like this, you have a nice, powerful breakout that follows. Again, I'm not saying that we're going to have a massive breakout, but based on this consolidation level, if we can remain above the resistance level, which is at 160.98, 161-ish, if we can remain above 161, there's a really good chance small caps are going to rally. Now, I just want to give you guys a heads up. I'm about to release, literally this morning, in about 2 hours, I'm going to release my top 4 Cyborg stocks. Now, these are the most explosive small cap companies. And they're prone to deliver triple digit gains, especially when small caps are breaking out. I mean, look at this. This is gorgeous right here. Now, if you want to get alerted to these trades, if you want to receive these trades as soon as my computer spits them out, click the button below. Get in on this. Don't delay. These stocks move extremely fast. We had a webinar on Friday. I gave, I believe it was JSC or JCS. I don't remember the ticker symbol. I go through so many ticker symbols that I don't remember any of them. I think the stock was up like 11% before the market closed. So these suckers move really quick. Small caps don't have the volume that large caps have. So if you want to get in on the fastest small caps, especially when small caps are breaking out for the first time, folks, look at this. This is cool. This is really, really cool. This is the first time. And remember, the longer something consolidates, the better the odds that the eventual breakout will be very powerful. Similarly, when something trends really well, there's a really good chance that the following consolidation will be really long. Markets tend to switch between congestion and trending. I know there's going to be guys out there that are going to tell you that there's a million different waves and trends. I only have seen 2, and I've been doing this for over 25 years. In about 6 weeks, it'll be 26 years, actually. I'm getting old. Wow. You know what? That means that I've been trading over half of my life. That's amazing. I just realized that. That's something else. All right, folks. Again, if you want to learn about how to invest in the most potentially wild run small caps, the ones that give you the highest probability of a real powerful move in a really short amount of time, no options, no strike prices, no selling spreads, no straddles, strangles, none of that stuff. Just buying small cap stocks and letting them ride for a week, and if they keep going, even more. Don't miss out. Get in on it now. Check out Cyborg. Talk soon.